Bank of Pakistan has decided to keep its key interest rate unchanged at 11%, as policymakers balance concerns over inflation and the economic fallout from recent floods. In a statement released after Monday's meeting, the central bank's Monetary Policy Committee said it had opted to maintain the rate to preserve price stability while the full impact of earlier rate cuts continues to unfold. The committee noted that headline inflation had risen sharply to 5.6% in September, largely driven by flood-related food shortages, higher energy costs, and persistent core inflation. However, it added that the surge in food prices was less severe than expected, with recent data showing a slowdown in price increases for wheat, sugar, and perishable goods. The central bank expects inflation to remain above its target range for several months before easing in the next fiscal year. It cautioned, however, that volatility in global commodity markets, possible energy price adjustments, and uncertainty around food supplies could pose risks to this outlook. Despite the floods, the bank said the overall economic impact appeared to be limited. Crop losses were contained, supply disruptions minimal, and key economic indicators showed signs of recovery. GDP growth for the fiscal year has been revised upward to 3%, while foreign exchange reserves have continued to rise even after Pakistan repaid a $500 million Eurobond. The bank also highlighted progress on the IMF's Extended Fund Facility and Resilience and Sustainability Facility reviews, developments that have improved the country's macroeconomic outlook. Still, the central bank noted lingering challenges: volatile oil prices, weak export prospects, and low private sector borrowing. Businesses continue to hold back on investment, citing high borrowing costs and a heavy tax burden. With nearly 97 million Pakistanis living below the poverty line and growth struggling to gain momentum, industry groups have urged the central bank to lower interest rates to stimulate production. But for now, the bank says keeping the rate steady is the most prudent choice to maintain price stability and avoid renewed inflationary pressure. The policy rate has remained unchanged since May, a cautious stance that reflects the state bank's focus on gradual recovery rather than quick relief.